Hello, this is Tom Cloud with my bi-monthly precious metals market update. I'm going to kind of jump around today because I want to answer some questions and emails, so it's not going to flow real smooth. I'll be changing subjects and go over products and economics. Start with the Russian sanctions. Certainly, we've shown a little gump by this morning, or yesterday actually, sanctioning banks in Russia and stopping their ability to borrow in the West. I mean, this is pretty big. And then certainly we saw Germany come up and not do pipeline certification. So we've had a couple of things right away on Russia, and both those have been good for gold. I mean, we've seen gold up this year already 6.4%, when the stock market's down 15%. There's a huge difference just in being out of stocks, and into that, some bond market has been selling off, but the biggest yet to come. And I'll just say at this point, we're seeing they think there'll be rate hikes from 5 to 7, 1/4% rate hikes by the Fed this year, which, I mean, it may stop inflation, but it would absolutely kill the economy if that were to happen, if we start having. But on the other thing, we're having the highest inflation in 42 years. So there's really nothing else to do. You got to raise rates just because of the situation that we have. So still negative on bonds. I think rates are going to continue to go up. Bonds are going to go down. All money allocated to bonds, unless they're, you may have some municipalities that are tax free, but you still are losing value in the principal of the bond. So that's the first thing I would do, is get out of bonds. The sanctions and what's going on with the pipelines in Germany, it'll play out over time, certainly. But it's been wonderful for precious metals as we start the first 2 months of this year. But the biggest shock came last week when money managers bought $7.1 billion in ETFs in gold. It was the fourth biggest ever bought in 1 week. And certainly has driven gold up over 19, or right at 1900. And certainly we see 2000 coming in not too distant future. You can't, with everything going on, money managers increasing. That 34,000 contracts that they bought on the 15th of February now bring a total to 151,520 future contracts betting on gold going up, while the ones betting on it going down has shrunk to almost nothing. So certainly you've made great moves getting into gold, and it's still the place to be. It's still money. It's still real. It's still all the banks in the world can buy it and have it on their balance sheets through the Basel III agreement. I mean, gold is it. It is the base of any investment portfolio. Certainly, I believe with all my heart, you should take the gold in physical possession, either take it delivered to your home or business, or doing our programs that we do with IDS, the lowest storage rate in the world. Isn't that weird to say a little company has the lowest storage rate in the world? We saw one of the big ones this week raise their storage rates from 50 to 60 basis points. They're like triple what we are. So we have the best deal out there, pricing, everything. Is just now getting the proper allocation that you want to have in your portfolio. But I am continuing to allocate more and more intangibles. I think it's time that we get out of paper, because this paper fiasco is not over. The stock market is not through dropping. The bond market is for sure not through dropping. So we look at that and worry. The next thing that we'll talk about is the interest. We talked about on the interest rates going up is the dollar. The dollar has stayed right around 95 since we spoke 2 weeks ago. And I've said many times, and I'll say it one more time, if it breaks below 92, it'll go into a fairly quickly drop. In my opinion, it would trigger a lot of sell signals. And the biggest one would be China and Japan, that own about 30% of our $30 trillion debt, or about $9 trillion in treasuries. It's over once they want to go. And certainly, you remember what happened 2 weeks ago, we talked about was the new digital currency in the yuan in China. And now the U.S. is saying we may have to go in and do that digital thing. Of course, we'd have all of our privacy gone. Every transaction would go to the IRS. They would know everything you spent it. There'd be a tracking system to track every dollar to get your rhythm of purchasing, what you purchased on a normal thing. All confidentiality would be gone. I mean, this is very scary, and yet we saw Pelosi say we may have to go to digital currency. Well, yeah, they'd love to. They'd hide about 30% of the debt and take away all your privacy. So watch the dollar when it drops below 92, Gold will go up 4% for every time the dollar goes down 1%. And that's proven. One other thing I just found in my research, and I don't think I've mentioned it before, but I was looking back at some of my speeches in 1980. I had a company for 4 years, and the Jimmy Carter, Ronald Reagan election was coming up, and Jimmy Carter got beat because he was printing money what at that point was an astronomical rate. He had asked the federal government for a $500 billion with a B budget to run the country. We voted Mr. Carter out and brought Mr. Reagan in as president. Today, in the year 2022, and this thing, we're 42 years removed from that, the new basis budget is 9 times that. Just think the government's gone up 9 times in the size of government with nothing. In the future, it's a runaway train. Why do you want to buy toilet paper? Paper investments, it's toilet paper. And you're going to just see it just fall off the wall. But why do people keep buying? It makes no sense to me. Certainly you want to hold a position in stocks. I'm not saying liquidate everything. I'm saying make a major change to a trend. It's going to be with us for a while. Now let's get into that. So just 30 trillion, one last thing. $30 trillion of debt. We've just hit 2% average. $600 billion a year. Remember, the whole budget in 1980 was $500 billion for the run the government a year. Now the interest on the debt is bigger than it was to run the budget in 1980. Man, is that scary or what? So let's get real quick to the product questions. People saying, why did you tell me to get out of palladium? Well, we saw palladium drop 40%. We had no idea that this was going to, come. But yeah, palladium is the biggest metal this year. It's up 24% since the first of the year. I mean, it's amazing. Russia has 39% of it. If sanctions keep on Russia, you're going to see the price of palladium continue up. Car manufacturers that still use catalytic converters and many other industrial uses will drive it up. But I still believe platinum is the better bet, and platinum has moved up 8 or 9% this year compared to 10 and 20 and 30% losses in the equity market. I think platinum is going to be another great year for platinum, and would not be surprised to see it back around 1,300 in the near future from the 1,100. It's now moved from 860s to 1,100 in a few months. So stay there with platinum. Keep buying platinum. I like it. Russia controls 11% of it instead of the 39% of palladium. So I think if everything did clear up in Russia, that you would see palladium resume its downward trend and platinum resume its upward trend. So stay with platinum. It's a great place to be. Gold is the place to be. Ratio this morning, 80 to 1 again. Gold is 80 times more valuable than silver. It had gotten all the way down to 65. And then the recent run of silver sitting at $23 to $24 per ounce, and gold going up 8%. It's put the ratio back at 80 and could go higher. Silver is the only metal I'm worried about on the short term, certainly not the long term, because you still are paying record premiums over spot. But there's no other way. If you want to buy sovereign things like Maple Leafs and Krugerrands and Kookaburras and all these different that are made by a government, yeah, you're going to pay a big premium, but they don't care if you buy it or not because they know it's going a lot higher in the future. There just could be a few more months or a year before silver breaks out and starts going back to the $32 per ounce it was when it fell 2 years ago. After going up 92%, we saw it go from 16 to 32, and then from 32 back to 18, now we're back to 24. So yeah, I still like silver long term, but right now it's hard to buy with all these interest rate questions that would hurt the economy dramatically if we even had 3 or 4 rate hikes. And silver is an industrial metal first, an investment metal second. So we've been into this thing 11 minutes. Let me close by saying that the IceCap diamonds, if you haven't looked at IceCap.diamonds, please look at IceCap.diamonds and call the office and 800-247-2812. That's 800-247-2812. And Dan or Jade will get your number and I'll call to discuss it. But diamonds are smoking. We've made them into instant liquid investments. We've got insurance against the grade, can never be changed. We're dealing with second and third people to be primary market makers. I mean, you've got diamonds right now. The people that started buying with us in July when we started are up anywhere between 14 and 25%. And we think it's going to go a lot higher. But you ought to, when you call me, I'll send you a sheet to show you the highlights. But look at it because some is confidential. There's diamonds, portable anywhere in the world, easy ownership, instant liquidity. We have a storage program for them at no cost to you. Put them on the blockchain through NFTs. So anyway, it's a quick overview, but give the office a call once again, 800-247-2812, and tell me you'd like to talk with me because I do all the talking about it at this point. So hopefully in 2 weeks, we'll have a lot more going on with what's going to be going on with Russia, the interest rate possibility being hiked, the budget deficit's out of control, interest on the debt's out of control. So just be prudent and move into hard assets. What else can you say? It doesn't take a genius to figure that out. With this bi-monthly precious metals market update, this is Tom Cloud signing out.